welcome to mywealth.com. I'm Bob O'Brien. I'm one of the senior instructors here with the courses. Welcome to today's video blog. Is buy and hold investing dead? Or is long-term investing dead? You know, we've all heard President Obama say a couple of times that there's not going to be a quick recovery. Things are going to get worse before they get better. And I want to show this to you as to why. I want to make certain that you're crystal clear as why. This way you'll be able to benefit from it. Obviously, it's going to be very difficult to benefit unless you're an experienced investor within the near term, within the next year or two. But if you can learn from this, what's gone on, this way once we come out of this, there's probably going to be an inflationary period. You'll be a much better investor. So I'm going to show you some charts, and I'm going to show you why there's not going to be a V-shaped recovery. So let's go to a couple of slides.
Also, make certain that you check out the written blog at www.mywealth.com/blog. Okay, let's take a look at that V that I mentioned earlier. And this is sometimes referred to as a double top. And here it is right here. Here's January 2000. We had September 11th right in here. We reached the bottom, and then we came back up. And that's what's referred to as a V. Okay, let's take a look at a half a V that we saw after the 1929 crash. Here was the initial crash in 1929, this red line here. So we did have about a 60% V where we rebounded. And here you can see is where a lot of the real damage was done with that market. Okay, why there will be no V-shaped recovery with this stock market? Okay, first of all, there's not going to be any earnings. You need strong earnings in order to have a strong stock market. That's really the driver of a stock price. And, you know, you can just look around and see everything that's going on, and it's pretty obvious that there's not going to be a lot of earnings in this economy. There's another wave of foreclosures coming. The Alt-A loans are probably going to be the new subprimes in 2009 and 2010. This is going to further beat up the banks. It's probably going to put some insurance companies besides AIG at risk, such as maybe the Hartford, Principal, Lincoln, and so forth. So, yeah, that's something that we're going to be facing as well. Continued drops in real estate. Residential real estate still has room to fall. There's been some areas like Southern Florida and California where it's really done poorly and it just seems like it couldn't get any worse, but there are other areas where it hasn't dropped that much. Commercial real estate as well is looking worse and worse, and there's not going to be a V with the real estate market either. I think everyone just seems to be getting too accustomed to the bad news. The fact that the Commerce Department revised its numbers on the economy for the fourth quarter to the economy actually shrinking 6.2% as opposed to 3.8%. That's normally pretty bad news. And also the fact that the stock market's down nearly 25% in the first 2 months of 2009. Again, that is normally really bad news, but we have become rather accustomed to it at this point. Consumers will continue to cut back. This is a good thing for the long run, but in the short term, it's ultimately going to keep the economy somewhat suppressed. You have no consumer, you have no profits. You have no profits, you have no bull markets. Because again, earnings is what drives the stock market. Earnings is what drives your 401k and so forth. Earnings in the underlying companies. So when you have no earnings, you have a problem. No credit for leveraged investors and no credit in general. Leveraged investors usually pump up the market, and that was one of the things that we've seen with a lot of loose credit in the real estate market, which pumped up the real estate market. We've seen this in 1920s and so forth. So a lot of them have been burned bad, and they couldn't even get credit if they wanted to. So don't wait. Make certain that you're able to see some of these things before they're happening. You're probably going to be seeing a new economy after all this. Probably see some heavy inflation. So you want to make certain that you're positioning yourself for your own financial security, and we help you do that. So don't wait. Get educated. Get in a course. Get to www.mywealth.com.
I hope you enjoyed the charts and the slides that I provided you with. I know this isn't exactly great news for you, but, again, I don't think anyone's going to starve or go without shelter in this economy. There's just going to be a time where we're moving backwards in terms of prosperity. But there will be time for leaps forward as well. but only if you're a little bit more scientific with your money. And that's why we offer our courses. So make sure you get into our investing course or our currency course. This is what's going to give you a macro view of things, so you'll be better prepared. I'm not saying you're going to be able to predict with 100% certainty what's going to happen. No one can do that. But you can increase those odds and make certain that you're prepared for more difficult times and that you're managing your risk a lot better. And that's exactly what we do in our courses. So make sure you check those out. Again, I'm Bob O'Brien. This is www.mywealth.com. Make sure you check out the written blog and have a great day.